I like to tell dad jokes at the webinar.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, you do a NFP report podcast. I mean, not podcast, but a webinar every week, right?
Yeah.
And so
every
I just want
month,
to go over the psychology behind that, how you've seen that maybe change over time, and how psychology plays into trading that report.
I'm not the only one that looks at the markets this way, and I'm sure you've done the same, where we look for surprises. So for example, as we're recording this, about a week or 2 weeks ago, somewhere between a week and 2 weeks ago, the Reserve Bank of New Zealand said, they're going to try and clamp down on the housing bubble over there in New Zealand. And so the New Zealand dollar just totally tanked, right? That's the kind of the same thing with these news trades. What you can do is you can get ready for a trade. Pray and hope that there's a surprise. That's basically it, right?
Yeah.
And so you're right. Like back in the day, 10 years ago, non-farm payroll was kind of like the most important thing. Now it's more about, is there inflation, or who's the first reserve bank to start raising rates? That's kind of the big thing now. Jobs are still obviously very important for the US dollar and on jobs reports for all currencies. And actually, I remember when I first started trading, the jobs report wasn't as important as what Colin Powell would say, because he was talking about whether or not they're going to go and invade Iraq for the second time back around 2001, 2002, in that area. So, it changes. The importance changes. It used to be that the non-farm payroll would pretty much set up the US dollar for the whole month. It's not really the case anymore, but you can still find surprises. The reason why we do it, I think, is because it's fun to get traders together. I like to tell dad jokes at the webinar, and that's kind of what we do in our downtime. And then because I find trading rooms to be absolutely boring. I've had friends that have done them and try to get me to do them. I just refuse because I don't want to sit there for hours, right? But we usually do sit there for about 45 minutes or an hour to see if it sets up. So yeah, you can do this with any sort of surprise. The Swiss National Bank had the surprise on January 15th, 2015 with Frankengeddon, right? When the Swiss franc totally appreciated so quickly. So they happen all the time. The flash crash, all these, if you had a tsunami or something, like these things will happen. They don't have to be economic news reports. But obviously with an economic news report, you have the advantage of actually knowing when it's going to happen. So you can kind of set it up. That's basically it.
Hey there, I hope you're finding this episode useful. I just wanted to let you know that Walter and I give away something valuable every month that helps traders improve their skills. You can enter to win by simply leaving an iTunes review and leaving a comment on our YouTube videos. At the end of each month, we'll look at the comments and reviews from the month, and we'll pick a winner at random. Each comment and each review counts for one entry during the month that it's submitted. So if you're interested in that, be sure to enter after this podcast is over. All right, back to the episode.
Yeah, for sure. And these things change over time, like you said. Like one report might not be as effective or at finding trades as another one. And then they could also do things like change how they calculate GDP, right? And that can...
Oh, yeah. Yeah,
really
you're absolutely
things,
right. Yeah. So the consumer price index has been changed in the U.S. and they don't. I think they don't look at fuel and food now as part of your everyday costs, which I find interesting.
Because nobody's like paying for that, right? So
yeah, no one has to go anywhere or eat anything, right? Yeah. And right now, like if you talk to the people who are deep in the economics world, like the hedge funds and stuff, in the fundamentals, they're going to talk about bonds. Which is fascinating, I think, because what we're seeing in a lot of emerging markets like Brazil, you can even look at China and here in Australia, what's happening is there's signs of inflation. And so if it keeps going this way, the reserve banks are going to have to do something, and they're probably going to have to raise rates. In Australia, they decided to spend $4 billion in the bond market to try and push it down, and it's not working. A day. 4 billion a day. So it's really a kind of a tricky thing. I believe that we've seen the bottom of the interest rates, like as in December 2020. And I think that like they might be going up for the rest of our lives. So it's interesting times, actually. It'll be really interesting to see who blinks first, which central bank starts to ratchet up rates first. And I think that'll be make for some really good trends in currencies over the next 2 or 3 years. So if things go as I think they will, which I think is, we're going to start to see central banks have to reckon with inflation, which is showing up right now in the bond market. But I mean, that's all fundamental stuff. Doesn't really matter. I can still just look at the charts and trade it. I don't like going into fundamentals, but you kind of have to if you're trading the news, like you said, if you're doing these news reports.
Yeah, sometimes you can get way too deep into it and like get into things that don't matter, right? But yeah, I mean,
exactly.
Same thing in the US. Like the rates can't go any lower, and if they raise rates, then they're going to be paying all this interest, right? So
yeah,
it's going to be tough. Let's see.
It's a tricky thing. And like the turtles, they never looked at that. They just when they taught those guys how to trade, they didn't, like, that wasn't part of the deal. They were just supposed to wait for the 55-day breakout. You know what I mean? Like,
yeah.
And so it's so funny. It's so funny that like, and you can watch TV all day, and literally every single person that comes on that business channel, that the CNBC or the Bloombergs of the world, or the what's it called over here, Sky News. Like, they have Sky News in Europe, in England too. But it's just like, every single person that comes on can have a different opinion about what's going to happen. That's the whole fundamental world. Whereas it's great as technical traders, we don't really have to, we can just say, no, it's actually made a new high. Like that's the highest price we've seen in the last 20 days. Mm-hmm. Like there's no argument there. You know what I mean? So, so that's what I like about technicals. Yeah.
Yeah. The price can't lie. Like if it's going to go up, it's going to go up. Right. So
yeah.
Cool. Thanks, Walter.
See ya.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.